A neckline for this head and shoulders is the wider 79 to 73 range due to the small gap up and gap down that start and end the outline. A steady and aggressive downtrend stems from the sustained selling volume at exceedingly high levels in the weeks immediately after the neckline broke. This is why it is very normal to see an extended period of flat trading even after the downtrend halts, precisely as the long-term downtrend line is crossed. During the downtrend, two double tops, one of which overlaps with a descending triangle, begin to define the 11 to 1795 range that presents a considerable barrier to a long-term recovery. The descending triangle's base is the wider 13 to 11 range due to the gap down that completes it. A gap up fill is a key bullish feature in a more medium horizontal range as the 11 level remains a central point in contentious long-term trading. Similar to other examples, sustained selling pressure helped by long-term bearish conditions leads to the eventual break of a gap up fill support for an accelerated drop. A longer-term view classifies the downtrend's origins from a large-scale flat top. A failed double bottom is marked by the 8.05 to 720 range that is breached by sufficient bearish volume to become the horizontal resting phase within a classic continuation. Additional short-term bearish context comes from the minor gap down fill that just happens to center around the 8.05 level. A noticeable decline is also identified to technically also classify this as a descending triangle. Due to the shallower decline, this is a case where the boundary between a regular horizontal range in a bearish continuation is blurred with the features of a descending triangle. Again, this is a small difference as the key feature here is the overwhelmingly strong break under the lower boundary of both formations marked by 720. A normal occurrence in mid-September as stronger resistance potential from the descending trend line crossing with the 720 level steadily reverses the double bottom's uptrend. 610 defines the center of the double bottom's upper boundary. It is also the site of the secondary feature of flatter trading before and after the double bottom's formation. When the long-term downtrend line is crossed, it is a gradual transition to a large uptrend. This does have similar features to a general reverse head and shoulders outline, but would not be a strict head and shoulders pattern due to asymmetry between the right and left sides. In contrast, May to July 2012 sees the development of a strict reverse head and shoulders, with clearly defined symmetry and a narrow but accurately formed neckline around the 610 level. A double top has stronger support at its lower boundary due to the pattern starting with a gap up fill. Naturally, this can lead to a delay in the pattern's completion. The extended delay leads to a familiar situation where a double top fails and becomes part of a regular bullish continuation. A relatively horizontal range over the old 13 level develops a slight incline that later becomes part of an ascending triangle. The upper resistance boundary is widened due to the slightly higher upswing in mid-August, and the gap up that starts the break to new highs in September. The gap fill starting 2014 presents a slight incline for analogous features to an ascending triangle. In early to mid-2015, the downtrend slows prior to the gap down, due to the stronger supporting potential of the broader ascending triangle's uptrend line and the old resistance area around 25. This is quite similar to stronger support potential of a more defined ascending triangle's upper boundary. It is also worth noting, the trend line from the old ascending triangle from 2013 also presents these features to produce a small upswing from March to April 2015. Stronger features of a downtrend are seen by the descending triangle in early 2015. There was also bearish strength before that, with the muted effects of a successful double bottom reversal being repelled by the long-term 3245 level. A downtrend line encompasses a descending triangle that both starts and continues the bearish context from June to August. When there is a normal bullish retracement in late July, the triangle's base, centering around 5720, has additional resistance potential due to a minor gap down fill. The descending triangle's downtrend line provides an excellent example where a pattern's downtrend line is crossed to mark the approximate area where a long-term shift in market sentiment took place. A failed double top serves as another reminder to wait for conclusive developments with a pattern before declaring a reversal or continuation.